Good evening, guys. JR with Secure Metals Exchange, bringing you your technical analysis for both gold and silver. Today, Tuesday, September 25th, 2012. So we'll get right to the point here, guys. Just a quick video. Just wanted to note some key levels here. So if I draw a Fibonacci extension from the all-time high down to the December of last year's low, we've really been trading on the 61% Fibonacci retracement zone here for probably the last 3 or 4 days here. So at this point, we just want to see if this little sideways trading that we've been seeing here for the last few days, what's going to happen here, if we're going to break above that or if we're going to fall below it. As of right now, it looks like the stochastics are pointing down. We are above all major moving averages, the 50, the 100, as well as the 20, as well as actually the 200-day moving average as well. So if the case is where we don't find support here around 1755, 1750, then we would look to find support at the 20-day moving average, or maybe even the 1721 zone, which is the 50% Fibonacci retracement. Now, if these two levels don't hold, then most likely we'll look to find support at around the 38% Fibonacci at around 1674. So I mean, the chart really looks good, guys. You know, there is some room for a little bit more of a downside move. The stochastics are falling. So I would like to see a little bit of a consolidation. The move up has been a fairly good move, and it's been a fairly fast move. We actually were fortunate to take a little bit of profits here, and we'll be looking to continue to buy on the way down here, okay? So as far as gold goes, technically looking really, really nice and sound. This is the third time that we've hit this 61% Fibonacci. The more we hit it, the more likely it is to break. And once we hit that, then most likely we'll be looking at this level here for support, not necessarily resistance. So the daily chart looking like it is looking to consolidate a bit more. And again, I would look I would look for a move down to at least 1750. If not, like I said, maybe a little bit lower. But again, I do expect all dips to be very, very, very well supported. As of right now, the weekly chart looking really nice. If the one thing that I really like about this weekly chart is that as of a few days ago, we are actually above this uptrend line, which is very positive. Now, it could be the case where, again, we come back down to test the line again, somewhere around here, maybe around the high 1600s. But again, who knows if we even go down that far. But again, that is what it looks like. It looks like we're going to be doing a little bit of consolidation coming back. But again, I do expect all dips to be very well supported. I don't necessarily like this about at least in the medium term. I don't necessarily like this. If you notice, this is a slight decline and this is a slight incline, and we all know that's called a bearish divergence. So we would look for the metal to come back down here somewhere around the low 1700s. But again, with quantitative easing announcements, as you can see, once this market starts to rally, you know, it could be, you know, who knows, maybe it won't consolidate and come back down. So I wouldn't necessarily wait for these prices. If you're a long-term investor, I would probably start accumulating as the prices come down. As far as silver goes, silver also looking really nice. I actually like gold a little bit. I actually like silver a little bit more than I like gold, at least as of right now. Let's delete some of these lines and get a little bit more of a clear picture. So this is your daily chart here on silver. We see here that we broke out of this line here. We broke out of this downtrend line, and ever since then, it's just been a really nice move to the upside. As of right now, if we look at the long-term Fibonacci extending from, again, the high of $49 and the low of $26, we practically just hit the 38% Fibonacci retracement. So again, I like the fact that there's a lot more room here for silver. But again, obviously, when you deal with silver, you're dealing with a lot more volatility. And also, I would like to see a little bit more volume. As we can see here, the volume went bananas here. And I'd like to see the volume starting to rise, and I think it is actually, or at least it looks like it is. Again, support at the 20-day moving average. We are above all moving averages, so as of right now, the moving averages are looking really nice. If we do come below this 20-day moving average, I would expect to find support at around the $31 or maybe even the high 20s zone before we continue to go higher. But again, if we look at the daily, the weekly chart, longer term, we are going to see that again. Silver also does have this declining, this bearish divergence. So again, if that's the case, I would look to find support at the 100-day moving average here at 32.90, or the 50-day moving average at the 50-day moving average at around $31. Again, if we look at the Fibonacci retracements, then we would look to find support here or around this zone here between the 30 and the 31 zone. So again, guys, not really much to report. Again, we were able to take really good advantage. We were able to take advantage of the really nice moves that the market has given us. And as at this point, is no time to get greedy. Take our profits, and we want to take them when we can, because the market is very volatile, and we still do have the elections coming up. So again, not much to report. The market is really, it looks like it's starting to consolidate a bit. Silver ended the day at a little bit under 33.80, and we want to see where this market is going to take us. But again, we're about to hit the 20-day moving average, so I would expect a little bit of support there, and maybe come back down to 31.60, but I guess we'll see within the next coming sessions. Guys, that's it for today. Very short video. Enjoy your day, and we'll look forward to speaking with you guys later. Bye-bye.